Hi, it's Larry Gaines, Power Cycle Trading. Well, everybody's been watching crude oil. We've had a massive sell-off here. You can see the crude chart here daily, from 67 all the way down here to a low of, broke down today below 50 and came down to 49.40. Now, we've got OPEC. They're going to start meeting next week, start talking about production. They probably need to do something from a standpoint of production cuts. But we don't know what they're going to do. So just kind of following the market. I want to give you a couple trading ideas here. So if we're not getting a buy signal yet for just straight out crude oil, but we're starting to see a little bit of potential here happening. So we've got this is a reversal on crude. This is our cycle reversal indicator. It's been extremely oversold. You can see down here. This is our lower study. This is a 10 percentile oversold. So we just had a reversal signal here today. Starting to get a little bit of momentum from our cycle 1 indicator. I want to see cycle 2 though go above 0 for positive momentum. But here are a couple of trading ideas. So here's just a bunch of different stocks I like to follow on oil. And you've got Apache oil that's very correlated to crude. You've got Anadarko, you've got EOG, Conoco, Valero, and the XLE. Now, the two that looked interesting here is ConocoPhillips and EOG. So here's a trade setup that is a couple different ways you could trade ConocoPhillips. So let's take a look here, and I'll walk you through the two different types of possible trade ideas or setups. So here's ConocoPhillips, and you can see that we're getting up here into that 50% retracement. The only major resistance is right here, the 200-day moving average. Okay, so that's coming in at about 67 bucks. Now we're looking for a potential, if it breaks there, potential move up to $70 right in here. This is another moving average, but and also some price action there. So we're starting to get some momentum shifts here. Cycle 1 and 2 are up on the daily. We've got cycle 1 and 2 up on the 4-hour. So that's very positive. So two different ways you could do this. You could set this up with a call debit spread. And then from there you could convert it to a butterfly if you started to, if this started to fall off, or you could convert it to even a ratio butterfly and bring in a credit. So let's take a look. So one strategy would be to look at buying the December monthly, the 21 series, 67.5, 70 calls. So we're kind of targeting up here for that $70 target right here. So that was going out today at about 97 cents or $97. So your max risk, if everything fell apart, would be $97 per spread. Potential profit over 150. Okay, so better than about a 1.5 to 1. Pretty good. Now, if this thing started crumbling, you could then convert it to either a balanced butterfly by selling a 70, 72.5 call against it. So then you'd reduce your risk down to 43. Or if you really wanted to reduce your risk, you could actually turn this into a credit spread, a ratio credit spread, by selling one more leg of the 70, 72.5. So you'd end up with bringing in right now today, you'd actually be into this trade with an $11 credit. So if it failed and went straight down, you'd still make $11. If it goes up to this zone in here at expiration, you can make over $200. So a couple different ways to trade ConocoPhillips, and I wanted to share that with you.